please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, that much awaited, much talked about recovery is finally here. Markets don't fall in a straight line. I think that's a given. And today we are seeing a decent recovery. I mean, 7 or 8 straight sessions of a fall, and this was waiting to happen. The question is, will we sustain? You're with us here on a fresh new edition of Trading Hour. I'm Prashant Nair. With me is Sonia. Sonia, good morning.
Hi, good morning. Looking good on the screen this morning. A far cry from what we saw last evening.
Oh, absolutely. I think, and as I said, waiting to happen. It would have happened. It was a question of when, timing, and it is happening now. And I think the sectors, I mean, if you look at the metal sector, which is bouncing back, the PSU bank sector, which is bouncing back, I mean, you know, these were basically hammered the most, and they are coming back a little bit. Now, there will be doubters, and I think, you know, and maybe rightly so even, people who would say that, okay, I mean, that bounce is expected. I mean, we've fallen 400 points, and you get a 50, 60, 100 point bounce. Fair enough. At what point will it start to reverse once again? So, you know, it is it's going to be interesting, and we've seen this numerous times in the past as well. And what makes it even more interesting is that we have 14th, the exit poll results from Gujarat, and then on 18th, we have the final results, and essentially the election results. So, next 1 week, pretty exciting.
It is, and you know, no one knows whether this is just a pullback in the correction or not, but we get so carried away with some of these larger events that we fail to see the kind of dips that are being bought, right? I mean, look at a stock like Maruti, for example. Once again, it's hit a new high. There was no dip in the stock, but every minor dip is being bought. Similar is the case with some of the other names like Bajaj Finance, Eicher Motors, etc., right? So, as a couple of our other guests were telling us earlier, in this volatility, the best thing to do is to perhaps look at the stocks that you want to buy. Oh
yeah, Bajaj Finance came up actually on your screen. So I mean, these are essentially top tier, highest return on equity stocks in their respective sectors, and I think it always pays to you know, have your list ready when you you know, buy them at your prices and not buy them running after them as stocks are rising. Essentially, that's the point that Sonia is making. Okay, 68, 69 points on the Nifty, 10,112 is where we are at. Sudarshan Sukhani is with us from s2analytics.com. Sudarshan, good morning. Good to have you here. What would, I mean, essentially that question, will it last? Will it reverse? Or will it last some more before it reverses, or it won't reverse?
Well, good morning again. Well, I hope it will last. In the morning, I said we are going to buy just when the market opens.
Yes.
And I think Sonia was quite right when she asked me, will you be buying? And she's dead right. She's absolutely on target when she says that the dip is being bought. In a bull market, dips are supposed to be bought. And that's exactly what's happening now. So I think the dip, the correction, we should ask whether the correction will last. The uptrend will last. I don't think there's any confusion about it. Probably the correction is over. Markets may stabilize here. They may be choppy as bears come in again, try to find some way of selling. I don't think that will work out. Traders should be long in this market. You should identify the stocks that you like among the blue chips, buy them. Once the market starts going up, then you'll start feeling missed out. Be long.
Well, Sudarshan, hi, welcome back. You know, kudos to you. Even yesterday, while the market was under pressure, you stuck to your stance of sort of being positive and buying in this market. Now we're getting a bit of a pullback. What are the large cap stocks that you would be looking at now? We were just making a case about Maruti, maybe Bajaj Finance that's seeing a buy on dip. What would you tell investors to buy?
Well, the first is Reliance. You can see, I mean, it's a sector by itself. The other is NBFCs. You have talked about Bajaj Finance and maybe some others also, like Bharat Financial Inclusion, DHFL, Diman Housing. All of these are buying opportunities. They've gone through a deep correction. Some of them have not corrected while the NBFCs were correcting. Now that entire sector is coming into play, as also private banks. So financials have gone through a sideways market and a correction, and that should outperform now.
Fair enough. What would you do in terms of trade, Sudarshan, stock specific?
Well, you know, this is really a stock pickers market. Prashant, you could close your eyes among the blue chips, pick anything and it will make money, hopefully. Bharat Forge is a buy today. That stock is an outperformer and it should remain an outperformer. Then we have M&M Finance. M&M Financial was one of the NBFCs which did not correct. I mean, had a very mild nominal correction. If this market goes up, and of course no one knows, I hope it does go up, that there's enough signs. M&M Financial should be an outperformer again. And finally, Mahanagar Gas, that perennial, sort of bull stock, it minor correction, trading range and new highs again. A much bigger theme is do not try to go short in this market.
Okay, that is the most sane advice. Don't go short in a bull market. Let's try and get some Twitter queries out of the way because we're getting many of them now. The first query is coming to us from Monish, who has 200 shares of Grasim at a price of 1,050. Should I hold it or should I sell it? So that's a significant chunk of Grasim that he has at 1,050. If we can just get the stock up for you as well. Sudarshan, Grasim is really not a stock that too many investors have made money out of, but over the last 12 months or so, it's given a return of about 30-odd%. The gentleman here is not making too much money. What would your recommendation be?
See, Sonia, you're right. It's not a stock that people have made money. It's not even a favorite of the market. So for retail investors, there is no reason to be in this stock. Absolutely no reason. Please sell. There are many, many other opportunities which this channel keeps on talking about, but exit Grasim.
Okay, there is some flash at the bottom of the screen. This is with regards to CERC, which is the electricity regulator. Is going to hear NTPC's GCV matter in 2 weeks. GCV, I guess, is gross calorific value. So we'll put out some more details in terms of what the matter, etc. is.
So there was expected to be some amount of relief for NTPC, right? And that's the reason why the stock was rallying. The coal calorific value was calculated earlier at the point of unloading the coal, and now the decision came through that it would be calculated at a point of generation and not unloading. But there was some relief expected to be given to NTPC. However, we'll have to wait for I guess 2 more weeks to find out what that decision is. But NTPC is rallying in anticipation of some relief. Sudarshan, before we go on to the next query, just a chart check on NTPC and what traders should do here.
See, NTPC is part of the power sector which is looking up after many years. So NTPC is now probably giving us more momentum on the upside. It's a buying opportunity. So is Tata Power, so is Adani Power, and so is CSC. That entire sector is in momentum now. It's a good area to be in.
Okay, we have another question, and this is from Karan, who has 130 shares of LIC Housing Finance, bought at 665 rupees. He wants to know if he should average down or sell. Sudarshan.
Well, I don't actually suggest averaging down, but you should hold on to it. With a disclosure that I actually also have LIC housing shares, so naturally I am bullish on it. If you're a long-term investor, well, you have a high price, but don't worry. In 3 years, prices will be much higher. Hold.
Okay, hold on. Well, there are plenty of stocks that are now just zooming away. Look at some of these names like, say, an Apollo Tyres is up and about. Bosch is rallying quite a bit. You have Bajaj Auto that's looking pretty good at this point. So plenty of non-index large caps as well up and about at the moment. Sudarshan, anything else that that catches your eye, especially in the broader markets? You have so many names. I just spoke about Apollo Tyres. There's GM Breweries that have suddenly surged as well. Anything that interests you?
Well, I talked about PC Jewelers in the morning, and that's an excellent opportunity to buy today. As also CEAT. CEAT, you talked about Apollo Tyres, but CEAT probably has a chart that is as good.
All right, Sudarshan, thanks very much. We speak with you soon again. Appreciate you joining in with that list of trades and some advice. We have CA Rudramurthy here with us from Vachna Investments with some F&O trades. Rudramurthy, morning.
Yeah, very good morning. See, first of all, a view on overall market. Today, for sure, market is on the uptrend. Day traders should definitely be long, and I won't be surprised if Nifty today makes level of 10,180 or even test levels closer to 10,200. But one has to understand positionally, we have fallen 350 points on Nifty in the last 4-5 session. We have fallen 1,000 points on Bank Nifty futures in again last 4-5 session. Having seen such a big fall, a small bounce like today cannot change the trend. So I am definitely negative on market, but however, for the day trader, you should not short this market. Positionally, I want to sell Nifty future look at targets of 9,970, have a stop loss of 10,200, and shorts can be initiated at levels closer to 10,180. Hardly 20-point risk I'm taking and expecting a target on the downside of over 150 points. Similarly, on Bank Nifty future, I expect this bounce to last closer to 25,250, 25,300. So on Bank Nifty future, go short at those levels. Look at targets of 24,550 and have a stop loss of 25,360. When it comes to stock specific selling, KSCL has seen a lot of weakness and even open interest addition is seen on the downside. I will be a seller in KSCL futures. Have a target for KSCL on the downside at 495 and a stop loss of 521 is a must. And I have another selling call on Hindustan Zinc. Again on futures, one can definitely sell Hindustan Zinc. Lot of delivery based selling is also seen with open interest addition on the negative side. Have a target of 270 on Hindustan Zinc futures of current month with a stop loss of 291. And I have a buy call just to ensure my overall portfolio gets hedged. TV18 broadcasting looks very, very strong, and one can have a target of 60 rupees in futures with a stop loss of 53. And definitely my wholehearted wishes to the entire team of CNBC TV18 for your 18th year of birthday. You're doing a wonderful job and you continue your good job.
Okay, thank you, Rudramurthy, for those kind wishes and for those calls as well. We hope to speak to you soon. But as we continue our 18th birthday celebrations, we have been getting you the biggest and the brightest market voices who have been associated with our channel for years. And one such market veteran and friend is Ramesh The Money. So hear out what he had to say on the next big themes for 2018.
Quick service restaurants, because I think that's a good example of how we play informal economy to formal economy. I think any technology changes will help that sector. I've been very bullish on cybersecurity over the last year or so. To be honest, the stock hasn't performed. But you start looking at the results that came out in Q2, you'll find companies in there that have, in a decent quarter, after paying 30% tax, produce 40% net margins. So when growth comes into these sectors, I think these stocks will get re-rated. Currently, they're available at fairly cheap PEs. So I think cybersecurity will be the other one that I'm looking at. I have not been very bullish on banks, either public or private, for a long period of time. But I would suggest the large, well-capitalized PSU banks should be looked at this point, including, I think, particularly the largest, because I think now with this NCLT auction going to happen in February and March, I think there's a serious possibility that some of it will be written back. Some of the auctions, the provisions that are already made will be written back. So there's a good chance that the market will re-rate the stocks fundamentally. And also if you look technically, these are making 10, 12-year breakouts, which tend to be very bullish for the stocks. So particularly among the very largest of the PSU banks, I would tend to put some money in there.
It is at the high point of trade right now, so it's really a pretty shade of green this morning. The Sensex is up almost 250 points, and you know what? It's getting better as we speak. In the broader markets too, there are plenty of stocks that are looking exceptionally good. TCI Express is one stock. It has had a phenomenal year. It's doubled in the year 2017, and today as well, TCI Express once again is up almost about 4-5%. There are plenty of such stocks to talk about, but let's also talk about the commodity space. Manisha Gupta joins in with a roundup of all the action that's happening here. Hi, Manisha.
Thank you so much for that, Sonia. Well, there's some more excitement coming in the commodity derivatives way, as SEBI today early morning has floated a paper for a feedback from general public on whether or not they should be allowing mutual funds and portfolio managers in the commodity space as of now. Remember, as of now, the couple of important achievements that we have seen in this current calendar year really has been about options, which both the exchanges are looking at, and of course the alternate investment funds category 2, which also have been allowed in. So allowing mutual funds and portfolio managers is something that has been recommended by various committees to the SEBI, to the Finance Minister, and earlier to the Forward Market Commission as well. But it really yet has to come in. And SEBI, of course, is asking for this feedback until December 31st. It is a comprehensive paper that they have launched out, listing various positives and, of course, feedback, asking various questions as well. The important ones, of course, are on whether or not the participation should be made for the domestic markets and, of course, for the international players in a phased manner, whether or not the mutual funds should be allowed in the gold ETFs and gold fund of funds, investment restrictions on what should that be in case of mutual funds, and of course the ETF based on certain commodities and baskets, if that also is a possibility, is something that the SEBI is looking at. Apart from that, open-ended schemes has been mentioned. There also are schemes talked about on whether it should be done in an index fund way or actively managed actively managed funds as well. Consumption or other commodity arbitrage funds is yet another thing that features in this SEBI's paper. That's about the mutual funds, but it also is talking about the portfolio managers on the extent of leveraging that should be done, the kind of pool money, how much or what kind of risks that can be allowed there. So as I said, it is quite a bit of a comprehensive paper that SEBI has come out with feedback asked until 31st of December. And the markets are anticipating that in calendar year 2018, you will see further opening, especially in case of the commodity derivatives markets there. Ramesh The Money now joins us to talk about that and more. Navneet, hi. First of all, about the SEBI's consultation paper, how have you read it, seen it? What is your sense with SEBI asking for all of these details and feedback from public? Do you think the regulator is more than ready now to announce or introduce more financial instruments into the markets?
Well, even we were more than happy to read such kind of a paper after a 13-year-long gestation where we were expecting that fund managers and probably portfolio managers will be allowed to trade commodity derivatives. But the hindrance here is that they have actually gone ahead and asked the normal brokers and other people for their feedback rather than giving up go ahead on a blanket state. So my sense is the proactive feedback should be coming from all sides because they have launched a future options contract in gold, and which is worth 30 lakh rupees. So we're not seeing much participation in gold options. There should be smaller denomination contracts which should be allowed for trading, and that will gather good traction and probably good liquidity in the market. Similar concerns is with the AIF, where the ticket size is 1 crore rupees and AIF is not allowed to invest in physical commodities, and investing 1 crore rupees into a derivative product becomes a very risky bet in terms of the market size, which is as small as 25-30,000 crores daily turnover, combining both the exchanges. So here they have gone a step ahead and asked the custodians and asked the other guys in the system to give their feedback, and then how they can nurture it and how they can take it forward. In my sense, if ticket size is small and PMS and these routes and other routes in terms of allowing foreign participation and domestic mutual funds to be participating in commodity derivatives, it will not only improve the depth of the market but also the confidence and the involvement of other participation also in the market.
Well, that clearly is the point, and as I just said earlier, that various committees have already recommended participation of institutional investors. So this market really has to open to those kind of players. As of now, we only are looking at the retail participation, and as Navneet mentioned, the other participation, of course, is still yet to pick up because of the ticket size majorly. Well, that's of course the big news that's coming in, and the markets would keep an eye on to that one. But Navneet, talking about the commodity prices itself, how have you seen the industrial metals perform? Because it has been very volatile. We have been making lower lows. It really is about the speculators' liquidation that we've seen in all of these metals at these current levels. Anything that you're picking up on either side?
We have seen a good liquidation coming in during the start of the week, and that's probably the catch-up that we've seen last week. Most of the gains have wiped off. Nickel to a large extent has gone ahead and probably cracked even deeper than what it started with the electric vehicle theme. I don't think it's a grave concern for commodity prices yet, because China economically is doing well. You are seeing data coming from China a little better than what market was expecting. Also, US markets data over the last 1.5 months have been way better than expected. The GDP numbers have been better. PMI numbers this month were a little disappointing, but that shouldn't have impacted the metal prices so hard. I would rather be a buyer on dips and probably would buy copper around these levels with small stop lists targeting about 5 to 6% upside from here on over the medium term.